Good afternoon, everybody, and welcome to our first webinar for the second ASX game that we've been participating in over the last sort of 3 or 4 months, Alio Tomato. Welcome to our presentation today.
Yeah, thank you very much, Jason, and hello, everyone. It is indeed an exciting time to be online and looking at stocks at the minute, and I just want to, on behalf of not only the ASX but ourselves here at Lincoln Indicators, to just thank you for the investment in what I hope will be an extraordinarily enriching education experience for you all. The share market can be a little bit of a volatile beast. It has its good moments and its bad. Now, obviously, the market's been doing well, and it feels kind of easy to make money. But let me put you to rest the idea that share markets only go in a straight line northeast. They don't. And in fact, the key to being successful in the share market is having a robust strategy that allows you to make decisions when they need to be made. And today, you embark on that journey. So well done, all of you. Congratulations. And I sincerely hope you find today's presentation worthwhile.
Good segue into a little bit of housekeeping before we kick off. Today's presentation is for educational purposes only. So if you were to act on any of the content within the presentation, certainly we recommend seeing a licensed professional before doing so. And of course, any past performance that we indicate and allude you to today is no indication of any future performance. Again, my name is Jason Bartolo. I'm the Senior Business Development Manager here at Lincoln. And as Alio mentioned earlier, we're very proud to be a part of the ASX share market game. Oh, just before we get into the agenda, another small housekeeping note. The piece of software we're using here today is something called GoToWebinar. It allows, obviously, you to hear us, hopefully, and us to have you muted out. So, but we make these presentations very much interactive. So we're going to have a couple of polls throughout to understand the gauge of the audience out there in the virtual room. And we also allow questions to be typed, and we'll get into a Q&A toward the back end of the presentation as well. So certainly take a quick look at the screen. Hopefully in those rotating slides before the presentation begun, you get a bit of an idea of how to utilize and participate. So get your questions going, whether they're stock related, ASX game related, stock market related, whatever they might be, get them in and we'll endeavour to get to them at the end of the presentation. So today's agenda, we'll quick talk about who we are and what we do. We're going to talk a lot about strategy and getting you started for success. Obviously, this is related to the share market game, but a lot of what we're talking about, and this will come across, is very much the way we adopt over the mid to long-term approach when you're actually investing your real money in the stock market. And of course, we'll get into a demonstration of the platform of how you can use Stock Doctor. And I believe you've all got 90-day trials on the platform, so you've got plenty of time to master it. I've got a team here who are all sitting at desks waiting to assist in anything that you might need with regard to the platform. But hopefully we put a bit of light to that and get you off moving in the right sort of stage here. So, Alio, to be very frank, and we've got a bit of a mission here, and what we've done for the last 30-odd years is, to help Australians invest successfully with confidence, control, and peace of mind. So why don't you take our virtual room through a little bit about who we are and what we do?
Yeah, look, thank you very much, Jason. And it is important that you understand what we stand for because, the challenge is the share market game only goes for 3 months, yet investing is a pursuit for a lifetime. So obviously there's a little bit of a disconnect in regards to what's made us so successful over the last 30 years and how we're going to be helping everyone play the game for a period of 3 months.
Very much so.
Now, that's okay though, folks. Our business has been around that 30-odd years, founded by Dr. Merv Lincoln, a great Australian, very smart man and all-round nice guy. There he is, running the bell lap in the 56 Olympics, funnily enough. So we do have a bit of heritage. Dr. Lincoln created a piece of brilliance whilst head of the Graduate School of Business at Melbourne University, which allowed us to be able to, for the very first time, using Australian companies and Australian data, analyse the financial health that a company was actually in. Groundbreaking work at the time and formed the business Lincoln Indicators that we are today, to which Tim Lincoln, his son, and our current managing director continues to drive the family mission and has done so for a number of years now, as we aim to empower investors to invest successfully over the long term with confidence, control, and peace of mind.
Yeah, perfect, Elio. So there's a little bit about us. Let's hear a little bit about you. So I might introduce our first poll question here. So these are very easy. I'll launch this out onto the screen. You should be able to see this on your screen soon. So just pick up your mouse. We really like to get some participation throughout this. So we will share the results with you so everyone knows who we're sort of talking to and with out there in the audience. So we'll close this one off fairly rapidly in 5,
Just quickly though, Jason, before you do, for those wondering, you can only select one option, unfortunately. So if you do it either personally or through your SMSF or both, just choose the one you do more frequently. That's fine.
Yeah, perfect. So I'll close this off now for us and we'll publish the results. So good to see that close to half of you are personally investing in the stock market. And there's the other half pretty much are all fairly beginners and some are new to the markets as well, which is what we expect.
Absolutely brilliant. I can't tell you how inspired I am by that result there, Jason. To think that there's so many people out there today looking to embark in this wonderful asset class makes me so proud. And, you know, I just really look forward to hearing about all the lessons that you pick up along the way, and no doubt the many mistakes that you'll make. But the good thing is it's all in a safe environment, of course.
Well, yeah, and look, and congratulations to you all for, firstly, especially those newcomers to the market, in participating in a share market game before putting your hard-earned dollars into a 3 ticker code symbol within the stock market.
Goes up and down.
That was really good. One more quick poll question, and this again will help us understand the nature of who you are out there. So again, we'll close it off fairly rapidly, but same applies, just one selection.
Yeah. I expect the most to be the first answer there in regards to little and no experience, but by all means, those that do have a little bit more experience, then by all means do feel free to answer. It just helps Jason and I, particularly with regards to how we frame our content today.
Yeah, definitely. So we'll close this off. We're up to 70-odd%. So if you haven't participated yet, quickly get involved, and we'll close it off in 4, 3, 2, 1, and thank you very much. As predicted, half again into little and no experience, only playing the ASX game, which is excellent. And then we still, 30-odd% of you have been in the market for medium to long term, and a small percentage, well done to you, been proactively investing in the stock market for years. So very good. Thank you very much for participating. We'll have one more of those polls in a couple of slides' time. Elio, those that, half the room are pretty new to the stock market. Yeah. So this is a chart that we talk about a lot. And obviously when volatility is rife out there in the markets, you just have to open up a newspaper to see what's going on a day-to-day sort of basis. Yeah. Talk us through this chart and what it sort of sums up around gains from 1900 to now.
All right, well, okay, let's go right back to the beginning, shall we, with Adam and Eve? No, we won't. Look, the good news is, folks, or I suppose let me go back. Many people, when they look at the share market, or when you tell someone, when you mention the word share market, inevitably the other person's eyes roll back and go, "Oh, that's a risky game. It's a risky mugs game." And that reputation has been well earned, I should say, over the many years. I mean, we've had periods in the share market where they've been exceptional, big falls in prices across the board. Recently, we had in 2007 the GFC. Many of you tuning in may not even remember what that time was like, but let me tell you, working in this environment, I can tell you it was a pretty scary time for all of us as investors.
Losing 60% of your wealth overnight in the stock market.
Well, not quite. It took a year to do that. That 60% overnight, Jason, was back in 87 when you woke up on Tuesday morning after Black Monday in the US, and basically 60%, it was eroded overnight. In the 70s, we had a oil crisis, we had hyperinflation, we even had Gough Whitlam. Geez, I'll tell you what, factors were working against the market that decade, and we were able to come out the other side. Look, jokes aside and long story short, folks, yes, the share market can be volatile. Right now, this is a very different distinction. The market can be volatile, but you can actually master the market quite successfully if you have the means to be able to block out the noise, so block out the nervous Nellies that tell you to sell when Trump won the election, to sell when Brexit occurred, to sell when, I don't know, some other catastrophe. What was it? Greece was going to leave the Eurozone.
Bird flu.
Argentina goes broke again, although that's been 7 of the last 9 years, so that's no surprise there. Whatever the excuse is, you just got to block it out. Because ultimately, over the long term, you are investing in businesses. And if you are in a business that's bigger tomorrow than what it is today, the share price looks after itself. Now, since the markets actually started back in 1875, so I'll take it back an extra 25 years there, Jason, the market has increased some 150,000 odd percent. Now, yes, that would have been great to be there, although unfortunately you probably wouldn't be tuning in if that was the case right now. But the moral of the story still remains the same, that over the long run, as our businesses grow, the share market grows. So our job as investors is to find the good stocks, avoid the bad ones, and then just let gravity do the rest of the work for us. And accept that, yeah, it'll pop around a little bit in and now and then, but it's that general trajectory northeast that's most important.
Yeah, it's absolutely true, and having a robust strategy, Elio, is the key to that, as we'd alluded to. So we certainly do that around here. There's 2,100 odd stocks on the market, and we currently like about 60 of those.
That's
so
right.
Less than 3% of the entire market there. So our golden rule number one, and what we have done for 30 odd years, as we talked to those previous slides, is based around what we call financial health. We look at every single stock on the market twice a year in reporting season, which, by the way, for those new to the market, is happening right now, also called earnings season or confession season, whatever terminology you like to hear. It's when companies have to deliver their financial statements to the market and prove what they've done over the last 6 months, 12 months, etc.
Yep, absolutely.
So the way they do that, and those of you that are out there that may run businesses and hopefully got time to be sitting here watching this presentation, then well done. But that looks at a balance sheet, a profit and loss, and a cash flow statement, and that tends to give you a lot of information around how a company's actually going, around profitability, around debt levels, around actual cash flow. Cash is king, as they say. So we do that twice a year on every single stock on the market. So it must form the foundation of all or any confident and informed decision. It certainly does around here at Lincoln. Our clients will roll with that unrelentlessly around our financial health model.
Correct.
And we do that, as we said, twice a year. So it allows you to invest with confidence, control, peace of mind that a company will not go broke tomorrow by investing in it today.
Now, the good point here, even if a lot of that was gobbledygook for some of you as you try to, start this journey, I just want to say, imagine if I was to knock on your door tomorrow and say, I have a business for you to buy. And inevitably, irrespective of what your knowledge is and the like, the first thing you'll probably ask me is, who are you? And then after we get past the introductory stage, you'll say, rightio, well, how much money does that company make? That's basically what we're really talking about here. The actual makeup of that business. How much does it make? How much cash does it generate? And how much money does it owe someone else? And all those factors together there can be measured. And we can measure then the company's overall risk, because you're only going to buy a company that's making a lot of money, paying cash, and doesn't owe much money. If you want to buy a company that's losing money, burning cash, and owes the banks a lot of dough, well, chances are you're not going to do all that great if you invest in that company. And it's the exact same thing with the share market.
Yeah, well done, Elio. Put it very, very simply. And that's what we try and do here at Lincoln. So thinking about this financial health that we actually adopt across the entire stock market, and a lot of big businesses around there, will come to us and want to know what our financial health model looks like across every single stock in the market, and pay very good dollars for that, by the way. I'll show you. Well, I want to introduce another little poll here just to get a bit of a gauge as to what you think So considering the financial health of the entire 2,000 plus stocks, there's about 2,100 stocks on the ASX or the Australian Stock Exchange, what percentage do you believe are financially unhealthy based on our model? And we'll show you this in a second. So just take a minute, have a little look through the bands there. I tried to keep them sort of fairly relatively even. But yeah, just take a second there, and we'll close this off very soon as well, I should say. Elio, anything to add regarding this? I'm sure we'll get into a little bit more detail when we get into the platform.
Yeah, and look, there's nothing scientific here, folks. We're just a general question. We're just having a bit of fun.
All right, here we go. I'm going to close it off in 3, 2, 1. So thank you very much. Just to share the results with everyone. Pretty even, really. We're sort of toward the top band. So 30-odd% of you believe between 0 and 30% of stocks on our market are financially unhealthy. Next range down, also similar sort of numbers. So, a third and a third of the room. And the makeup sort of fit between the 51 and 70%. Very important. So I'm glad no one actually asked why that's even important.
No, we did a good job with the introduction then, Jason.
Yeah,
very good.
Excellent. It was just a more of a little tongue-in-cheek type comment. So keeping those numbers, remember those numbers there? We'll just hide that and we'll get into the actual health of the market. Now, Ali, I know how much you love this slide. Yep. So why don't you take our virtual room through what we believe are unhealthy stocks on the exchange?
Well, the 11% that answered that 71 to 100% mark were actually correct. And this is a bit of a startling fact for many who are considering investing in the share market, because the harsh reality is, whether we like it or not, that the vast majority, in fact 73.8%, nearly 3/4 of the entire stock exchange, are exposed to unacceptable levels of financial risk when it comes to operating their business. So if you're using the commonly adopted method of dartboard investing when it comes to selecting stocks, there is a 3 in 4 chance that you're going to be picking an unhealthy business. So should that shock you? Yes, it should. I mean, blue and green's where you want to be seen. They're our strong and satisfactory companies. And yet so much as the yellow, brown and red, which are signs of dread, actually exist out there. In fact, you might be amazed to know, folks, that a large amount of companies listed on the stock exchange are actually smaller in value than probably the house you're watching this session through right now at the moment. It can be a minefield for an investor who doesn't have this particular insight. Because if you are in that yellow, brown and red area, what you're effectively doing is, chances are you're going to live and die by whatever your bank manager says. You might be putting it all on the line, and you might get lucky putting it all on black, but of course you know that eventually can stop too. Or the other thing that happens in the share market, we have what we call capital raisings. And capital raisings are when the company effectively admits to the market that we've run out of money and we need some more. Now, investors, of course, give that money over, not because they're generous, but because the company's probably going to go broke if they don't get that cash. And that's just not the type of business you want to be in. You want to be in a company that has a rock solid base, that's generating strong cash flows, strong profits, and has also got, the eye on the future, not worrying about paying the bank manager back. Now, that number on the right-hand side, our business has a long history of identifying corporate failure before these companies go under. In fact, we have a 95% accuracy level of predicting corporate failure before it occurs. So, there's been a litany of stocks. You would know the well-known brand Oraton, for example. When that went under, we picked that correctly. 10 before CBS picked up the shell and now runs with it themselves. We picked that company would go broke.
Dick Smith,
Biggin, another one that a lot of those junior stocks junior investors want to get into. Yeah, sure, they can be sexy. The PR spin looks good. But when it comes to the real bones of how you're going to make money in the long run, it's just not the type of company you want to be in.
It's all in the numbers, isn't it, Elio? Absolutely. And that's what that financial health of the market sort of ring of truth, we call it, and that's what it indicates. Now, while those of you out there, and there are a lot of you, I would suspect most of you would have access to your free trial now.
Yeah.
So when you're looking at a stock within Stock Doctor, those colours are very important. So each company will have a colour of a full ring, if you like. So a strong company would be a full circle of blue. So
Yeah.
we'll identify that a little more once we get into the platform as well. But that's our first rule, everybody. We also have we talked about strategy and having a robust plan, etc. This is our robust plan. We call these our 9 golden rules. So we've talked very quickly and not too much in depth about our golden rule number 1. It's the first and foremost filter or screen, if you like, across our 2,100 companies. So once we put that financial health on and we look at those strong and satisfactory companies, we're down to about 450 that actually look pretty sharp in and around that. Our golden rule 2, and which is highlighted by GR2 and GR3 there, are our primary criteria, where GR2, we actually look at the management, who's running the show at the business. And I don't mean Jack Smith or Joe Bloggs or whatever his name is. It's more around the underlying growth or key fundamental metrics that we want to see. So it's one thing having no debt, good cash flows, and good profitability, but the next level on in looking and coming up with a stock that's going to be worthy of your hard-earned money is around that management assessment and then the outlook and the forecast for the next 6 months, 12 months, 18 months moving forward. So those GR2, GR3, we'll get into this a little more. It's much easier when we start to look at these key fundamental drivers, and we don't want to bog you down with too much of the technical stuff so early on in the piece, but those are our 3 rules. When we've gone through the ringer there, and it might be a nice little time in a second to go to the next slide that sort of explains this, we're left with a bunch of what we call investable grade stocks or Lincoln Star stocks. And your job is to understand what it is you're trying to do out there in the market, and then investing in a pool of those particular stocks from the right basket, if you would.
And we'll also give people some guidance in regards to which of those rules will be more important to you during this short-term game.
Yeah, perfect. And you can see them there, 4, 5, 6, 7, and 8, and 9's a bit of a marketing ploy to follow all of those rules. So some of those will be, and this is a whole presentation we'll touch on toward the end of the presentation. There's a whole series of these webinars around that educational process. So we'll touch on that more and more as we go on. So Elio, again, into our what we call our qualitative approach, how do we identify star stocks?
Yeah, so by quantitative, what that means, folks, if you're not familiar with the term, is that it's really a facts-based screen. So we apply what we call a quantitative process to go through the massive amount of information that's out there, 2,000 companies. We assess the financial health on all those, and then what comes out after we then apply our Golden Rule 2 metrics is we then come out with a circa around 100 to 150 companies that, on a pure numbers basis, meet the grade. But of course, numbers are one thing, but you need a little bit of, a bit of nous when it comes to share investing. And then we apply what we call a qualitative overlay. So after we've looked at the numbers, made sure they stack up, the numbers don't lie, we assess it from that perspective. But then we give it a bit of what we call the smell test. We look at the company, we kick the tires, we assess what we call the active risks of a business. Now, it's important for me to note, I know I talked earlier on that long-term share price graph like it's so easy to make money. Make no mistake, you can lose a lot of money in the share market in real life. And businesses can lose money. And even great businesses can have tough periods in their own business cycle. So what we want to do is, all companies have an element of risk in their operations. There's no business with no risk. What we want to know is whether the company's got a good handle of those risks, and even if they don't, is it likely to blow up in their face and cause them a big strain in their company operations? So the quantitative, we make our smart call. Qualitative, does it pass the smell test? Are we okay with what they've got? And then what comes out the other side are our star stocks. So if you've had the trial, you would have noticed our star stocks, all our stars that have been popping up next to the codes of the companies that we like. we have now, for those of you playing the game, the color stars you're most likely going to be focused on are the gold and green stars. They're our star growth stocks and our borderline star growth stocks. So these are the stocks that we believe suit what we call growth-focused investors. Investors that want to see the value of their capital grow above the rate of inflation plus a risk premium over the long run. Basically, you want your money to go up.
Yep, share price up. Buy it at $1, sell it at $2.
Well, that's the idea. But of course, it can be a very windy road to get to that path. If only it was that easy.
And yeah, sorry, we'll just move through this a little forward because we're sort of almost halfway through and we really want to get into to generate that. But that great man, for those of you that don't know, is a man called Warren Buffett, who is arguably one of the greatest investors that's ever been. And he sums it up fairly easily there. And you can read that yourself. But the most important bit for me is the bottom part. What's needed is a sound intellectual framework. We're going to give you that. We're going to explain why that works. And you can see those numbers there generating those sort of returns. So again, the hardest thing for us is to keep this and keep that in the back of your mind. We're not here about making money as quickly as possible in the next 3 months around a share market game. It's great that that's the way that the game is scheduled, etc. But investing is a long-term approach. You do not get rich overnight with it. It's a building and doing it well with a methodological approach and a framework, and you will do well in the stock market. So we went out to a couple of the ASX previous game winners, etc., and we just asked them. So I'll just leave this up here for you to have a bit of a look at. Just so you know a few facts around well, not a few, just the one that I'm currently aware. So the game only started about a week or so ago, and there's currently 6,200 game players out there. So your odds are out there, but it's all around winning and getting as much out of your 50K, I believe it is, over the course of the next 3 months. So you can have a little look. By the way, you'll see bottom right corner, Leprix, who came second place in the game. He was using. Snapper, who came second place in the game, the last game this year. He was using Stock Doctor for his approach and picking out stocks there. So know that the platform will work for this shorter term scenario as well. So Elio, around your plan and what you should be doing. Let's talk quickly through this because it'll be probably better to demonstrate it. I'd suggest, but. Talk us through a bit of a strategy.
Yeah, look, and I go back to that 9 golden rule screen that Jason showed you earlier, and I think he glossed over golden rule number 9 a little too quickly because, in fact, it's actually our second most important rule. And why is that? Because I contend, folks, that to be successful in investing, it's not the actual strategy that you decide to employ, but it's the discipline to stay aligned to that strategy that's important. Too often investors will start off like a house on fire. They meticulously plan their strategy out, and then the minute they buy their first stock, it goes down. Now, that's not a phenomenon that's unusual to most people. In fact, it probably happens more often than not. But what makes people successful in the share market is the strategy they adopt and their discipline or their ability to stay disciplined to that. So, we're going to help you with building an investment strategy relative to what we believe will help you do well throughout this game. So starting with golden rule number 1, we've got financial health. And obviously that's important. We've already talked about that. Now, what we're going to do is we're going to go into the program now, Jason, because rather than have us talking to a slide here to highlight these points, I think it's going to be better if we show everyone where they can actually find it within a game and within a company's research. So perhaps, Jason, we can go into, say, CIMIC. Let's go to have a look at CIMIC there.
I'm just hovering across the code and then clicking on it, left click, and that'll open up into our 9 golden rules page, everybody.
Excellent. So this is the same login that you've actually got access to yourselves, folks. So you're seeing the same thing on screen as what we have here right now at the moment. So CIMIC is a star stock. You can see that. It's got a gold star. Remember I told you about the color coding? It's a star growth stock. And that, as well as our green stars, are going to be the ones that you're going to be looking at to assist you in this game. Starting with financial health, we think that's very important. Golden rule number one. Now, look, to be honest with you folks, over a 3-month game period, you could probably have an unhealthy business and hope you get lucky. But I mean, we got to stick by what we believe, Jason, and we firmly believe that picking healthy businesses is the best way to achieve performance.
We'll be able to certainly identify. There's a watch list within. We'll show you in a second. You'll be able to know if what state that financial health is either way. Up to you if you want to adopt that risk.
Correct. Now, Golden Rule 2 is management assessment. Now, actually, this one here for the game, we're not going to talk about all that much. In a short term, important, very important for a long-term investment. But for a short-term investment, what's probably going to carry more weight is the next rule, Golden Rule number 3, outlook and forecast. There's a saying in the share market that the market is forward-looking. So even though I make $100 or $1 million today, everyone says, well, that's great, but what are you going to make tomorrow? And often the share prices can move quite significantly on the back of what's going to happen tomorrow. So forecasts are going to be pretty important for you during this game. You'll most likely want to be in companies that are expected to grow their earnings a hell of a lot in the coming year. Because at the end of the day, if you want to be in a company whose share price goes up, then you're going to have to find the company that's going to be bigger tomorrow than what it is today. So what Jason's highlighting there is our Lincoln forecast for the coming year. Now, guess what? We're just on that cusp of reporting season. So that number is going to change very, very soon. What Jason's now going to show you is the consensus number, which is the market's opinion in regards to what the stock is going to do. So the Lincoln one, that's Lincoln's view. And then on the right, you've got the consensus. Now, as the name suggests, it's not the market making up this number. What it is a group of analysts who are analyzing this company, who basically submit their research, and then the middle observation, or the mean, the median, the middle of the road, is taken as the main observation, and that becomes the market view. So you'll want to be looking for stocks with good growth prospects moving forward, okay? Oh, and just quickly, Jason, if you could scroll on top, if you wouldn't mind just highlighting the tours up the top there. So if this is all new to you and you haven't logged into Stock Doctor yet, then please take one of our interactive tools in order to learn how to read the actual screen itself. Okay, so you can go through it step by step in order to learn. So I'm going to make
all of these icons will all have a tour. You'll spot them everywhere around. Just really get amongst it.
Yeah, correct. And so I'm going to assume a little bit of assumed knowledge, as it were, because really we want to get to the chase of it. The next golden rule is golden rule number 5, share price sentiment. Now, remembering we're just showing you the rules here that are most likely going to help you in the game. When you've only got a 3-month time frame, folks, you're not going to have the time, inclination, or the patience to wait for a stock to stop falling and turn around. Basically, it's a sprint. This is not a marathon. You can't take 2 or 3 kilometers to have a bit of a jog rather than going at full pelt. You know, you are absolutely going full clappers, like a dog with your ears pinned back chasing over that little fake bunny. You're going like nothing else in order to try to win this game for 3 months. So you need prices that are on uptrends, not ones that are on prolonged downtrends. So, you can change the time period to get a different sense as to where a stock has come from and where it's got to now. And in the short game, the trend is your friend. That's definitely the case. And we've got for those of you that are advanced in your investing, we also have a full service charting package in Stock Doctor that can assist you if you are looking to apply certain indicators. For the odd 50% of you that are sitting there going, what is it you're actually covering off on? Don't worry. This is not really all that important to be successful in the long run, in our opinion, but in the short run, it might be important to you. So just be aware of that. Last and certainly not least of the golden rules that are going to make a difference this game is golden rule 8, latest price sensitive announcements. Now, as Jason alluded to, this is the reporting season. So we're about to get the latest financials from a company, and the company is going to disclose those numbers on the stock exchange. It is traditionally a very volatile time because if a company meets the grade, great. The best you'll hope for is that the share price goes up a few percent. If nothing else, it'll just hold its own. But I tell you what, folks, if it misses the grade, unfortunately, the share price can often get slammed. And this is an important thing for you to know, particularly in this short-term game, because again, if you do have a stock, that takes a fall, you're going to need to act really quickly, because within 3 months, you might not have the time to wait for that whole price to recoup again. And so therefore, being abreast of what's occurring in the announcements is really important. Just quickly, though, we're going to show you a tool up here. So if you can click on it, Jason, and select the corporate calendar. Thank you very much. So we've talked about when companies are due to report and the like. Within this tool, you've got your little tool going there, Jason. Very good. Within the tool here, you can actually see a list of the companies and when they're due to report. So if there's a company that you're holding in your game, you can type in the code if you like, or alternatively, you can have the full list there, and you can go through all of them, so you know when potentially there's going to be a big news announcement relating to your company.
Can we go? That's a really good point, Elio. I just want to take one back step for those of you that are on trial. If we just start here, click on the tools and go to watch lists, because we've pre-populated for you a watch list that will show you the ASX share market game already, right? So you can click on that watch list. It's already pre-populated within your trial, and you can see the full list of, I think there's, 230 odd stocks or something that allow you to invest in within the share market game. Once that you've got that watch list, if I just take that back a step, go back to what Elio was just talking about. You click on the corporate calendar. You can have a look at, take this little tick away and just have a look at stocks in your watch list, because you've got your own watch list there now.
Oh, excellent.
Now this list is populating with all of the share market game stocks, which you can then have a look and go, all right, well, today's the 7th. I could go and have a look at those particular companies there right now just to see how they have reported and what share price move might happen today. So be very, very careful, because if we click on something like SCP, here, which reported this morning, you'll start to see some of the upside or downside that happened on the stock. So this one was pretty much in line. You can see that little price up there in red. It's slightly, what's that showing you? It's 2 cents down, or 0.82% on the day. So that one didn't report probably too bad, for instance. So what you're looking for, if you're playing the share market game, for instance, would be a stock. If I just go back to the corporate calendar, just be careful. I know I had a quick look at NVT this morning, and this one reported pretty well. So what you might do, hypothetically, if you were playing the share market game, that stock reported and was up 4% for the day.
Yeah.
So a bit of a shorter term approach. This is a stock that is financially healthy. It actually reported a pretty average set of numbers, or has done in the previous times, but it was all about these set of numbers here. So in the next day or so, these numbers will populate. That column will move across and show you that those numbers are populated. So a couple of little ways to access that corporate calendar, Elio. So sorry to make you lose your train of thought there.
No, that's okay. We'll go back to the presentation just quickly, Jason, because that's a good lead into to that. To the next section there, because there are various features that in Stock Doctor will help you. The first of which is that game watch list that Jason alluded to, and I really like it because it is your fundamental analysis on a page. What I want you to do, Jason, if you wouldn't mind just going into the watch list again, because another little tip. Because again, remembering Golden Rule 5, share price sentiment is going to be pretty important for you in this ASX share market game, and chances are you're going to want to make sure that you're on, stocks that are actually at least going in the right direction to start with, to help you make it a little easier. So maybe if we can scroll to the right a bit, Jason, if we can, thank you. Hopefully I've got that here in this display. Whoops-a-daisy, there we go. If you can please double click on price change 1 month, thank you. And then we'll click on, yes, it does kick you back. And then if you can click on it again, please. Okay, so what you're now looking at here are the stocks that have done the best in a month period. So if you wanted to find those fastest moving buses, you can start with this group here and then go back and see, okay, well, are they in good financial health? What are their growth expectations looking like? All those sorts of factors can then help you build a portfolio of good stocks. So this is a great little tool, this watch list, to help you stay abreast of all the key data. And then as Jason alluded to, it's really important, particularly around reporting season. But see that column there, price sensitive announcement? So Jason's just clicked on that. This is a great little tool because what you'll be able to do is to see who's actually had an announcement most recently. And then you'll be able to go through that list and be able to see if there's a company of interest that's actually impacting you that may be may need some further investigation.
They were very interesting. New Hope this morning as well. Some sort of some takeover talks and in and around.
Yeah, Wesfarmers sold them the 40% interest in their joint venture. That's what that was.
Could be a nice little trade for a share market game again.
Yep. Possibly so. I don't know. But we'll go back to that slide. So the 9 golden rules was then the next screen. So we've already taken you through that a bit.
Sorry. Wrong slide. Oh, jeepers. Oh.
Okay,
Sorry,
bear with
us. Bear with us.
Okay, so the 9 golden rules screen we've already walked you through, where we've shown you the key things to look at. Remember those tours, folks. They'll give you a lot more information in regards to how you can and should be navigating that screen. The next tools that we want to show you, though, really relate to the ongoing management of your portfolio. The first of which is we want to go into the portfolio manager. Thank you, Jason. Okay, so within the portfolio manager, this is a really good tool to help you stay abreast of how your portfolio is going. Now, you've already got one in the as part of the game, so you don't need to necessarily replicate it all here. But there's a nifty little feature that if you do want to put in the time to do it, it can actually be quite worthwhile. We'll show you that a little bit later. First and foremost, though, I want to show you something we call the portfolio constructor. So the portfolio constructor is a tool that allows you to build a portfolio from scratch. Now, of course, you need to appreciate and understand that we're talking about real money, and that's why we've got nice disclaimers to just educate our members on how to use the tool, because the last thing we want to do is have people make mistakes using their real life money. But once we have read that and understood how it works, what this portfolio is going to allow us to do is to create one aligned to either a growth investor, so the one who wants to achieve growth in the value of their capital. There is another type of investor that we haven't spoken much about in this presentation because it doesn't align with the game, but an income investor looks to invest in the share market so that they can generate an income in order to fund their particular lifestyle, for example, say. So income investors, not as relevant here, but they're there. And then you've got general, which is basically both. They want a bit of growth and a bit of income. But we're going to stick in this growth area. We're not deviating from here. And given the short time frame, I think we go aggressive in terms of risk profile.
I dare say so, yeah.
Now, you can be conservative, and obviously it goes up the scale in terms of risk appetite. But this aggressive one is the most risky approach. Now, again, not that we advocate taking risk. We already de-risk a lot by having good, healthy businesses, and this is only done on our star stocks. But obviously, these aggressive stocks mean that they can be more volatile. So important to remember that. Then we do use profile. What we can do is we can say, right, we want to see 20 stocks. We know that we've got $50,000 to invest in the game. Thank you very much. And we'll just allocate them all evenly across the investment there. And then I select next. It then asks me a question about liquidity. You don't need to worry about that because you're in the game. And I wouldn't exclude any sectors either because I don't think you can do that in the game as well. What you've now got immediately put in front of you are a list of 20 companies that we believe they are star stocks and they align with the objective of being a growth aggressive investor. So again, you could choose, you can even see it calculates the value for you if you like. If you clicked on print here, I think it even gives you an estimate of the amount of shares that you'd be possibly opening or buying. Sorry, Jason, I should say. Yes, it does. It just has quantity there. For those squinting, it's just a little bit just there on the far right-hand side, but we'll get rid of this for the moment. So here's a little nifty thing. Now, of course, you can, if you like, compare each stock side by side. So I can click on compare, and you can see and go through them each one by one in order to see which one suits you. So, for example, some people, if I go to, say, Golden Rules, where are we, 4 to 8 here. So this BHP is a very large business. Whoops, didn't want that. What happened there? Let's go compare again. Okay, so BHP is a very big business. So some investors in this game who want to try to get large capital gains in a short amount of time, Jason, may not necessarily be in BHP because it's a bigger, more stable business. Little stocks like Appen, for example, could very much be in that realm. And you can see that its performance, Appen has been one of our star stocks, and it's done really well, actually. Its share price sentiment's up above 170%. And the good news is we still expect them to have a good result. So I can then, if I like, simply add them there, but I'll close it down now just for the purposes of speed. What I'll do is I'll select a few of these, or I've got them selected. I won't remove anyone. So what I've got now here is this list. Now I can, if I want to, save it as a watch list to do more research. Or, of course, I could run again if I wanted to see a new list of stocks under a different profile. But a very useful tool for you to build a portfolio from the start, from scratch. Once you've got your portfolio in there, you can then use our portfolio manager and a tool called the Portfolio Optimizer. Yes, we're aware of this. Thank you. And then within the Portfolio Optimizer, you'll see there's stocks with little red dots and gold dots and the like. Red dots are basically non-star stocks. So if you're holding just star stocks leading into this reporting season, and then you've basically been kicked out of one, for example, it'll give you a red dot. You can remove them. And guess what? It actually gives you what we call optimized suggestions based on the profile that you select, which in your instance is going to be that growth aggressive once again.
Correct, yep.
Okay, so they're two little nifty tools, folks. Again, remember the tour to learn how to use it. Very important. But Jason, the alerts feature, because this is also important for those people who are keeping abreast of all the news that's going to be occurring at this very busy time.
Yeah, look, there's our clients and everyone in the market should have some ability where you can create some alerts that alert you to things when you go about your own day. The last thing we want you to be doing is standing here or sitting at your desk watching the market all day to potentially get an upside move in a share price for a stock market game. So you can create yourself a whole lot of alerts. So, for instance, if you wanted to have a look at, I don't know, we talked about BHP earlier. If you wanted to set an alert for BHP, you can see the different types of alerts. So Consensus, Elio alluded to, is the big research houses out there. You might know names like Goldman Sachs, Morningstar, UBS, Morgans, those sort of places. Any valuation changes that we might put in, any substantial shareholder change. This could be an interesting little one to set an alert around in the stock market game. What that means is if there's a big fund manager starting to buy up a stock, what happens in a stock market? It's just an efficient environment. More buyers mean the price will go up. More sellers means it will go down. So if you're getting a little inside information, I shouldn't use that terminology, but a little alert to set you around some substantial shareholders, you might get an alert when a fund manager like Australian Super, for instance, starts putting millions of dollars into a BHP. Not that that would move that share price too much, but you can see the idea. You can just put in here whatever note you wish and set a little tick there and save, and that will actually send you an email. What's probably more important is around these notification alerts, which would be probably very useful. So you could have a list of stocks, whether they're in the game already and you've selected a BHP to buy, or these will be some of your watch list stocks that you might want to just wait till an announcement comes out, because you can see that now through the corporate calendar on your alert, on your watch list page, what when some new price-sensitive announcement comes out. So hypothetically, you go, right, BHP, new price-sensitive, buy in ASX game. Something very simple, process it through the day, email me alert when triggers. Once I've set this alert, it'll actually save it, and it'll just email you there. You'll see BHP, wherever that, there it is, will be automatically emailed to you. Once you log in and that alert is triggered, it becomes red like these particular alerts. So you might duck off into the game, quickly have a quick look at the BHP announcement, of course, and make sure it's positive. Yep. Sticking to star stocks, we'll update you on all of that, and we'll tell you whether they're positive or negative either way. But there's a whole lot of alerts that you might be able to adopt. So you could even create multiple alerts. I won't click through that, but you can create multiple alerts. So once you've got your list of stock market game, whether it's 5 stocks, 10 stocks, what we do advocate when we are setting up a portfolio, whether it is 5 stocks or 10 or 20 or whatever you want to buy within the game, use an equal weight approach. So if you've got $50,000, which I believe is what the stock market game starts with, you want to buy 10 stocks, you want to put $5,000 into each of those stocks. All right, equal weight. That's how we'd definitely recommend you do things in real life anyway, that's for sure. So, if you're using this game, and a lot of you did, half of you said that this is about real life and setting yourself up, do and practice what you would do in the real life environment. Don't put all your eggs into one basket.
No, absolutely not. And ultimately, just remember, folks, that the tool has a number of different features that you may very well find important and useful. One that we haven't touched on yet is that stock filter you can see up there. So you can actually go in and scan the market if you like, particularly on the back of this latest reporting season coming through. You can go through our star stocks if you like. You can see some of our emerging stories. Of course, they do need to be in the game for you to actually be able to buy them up, but there are stocks in there that you may wish to consider. The other thing I just want to quickly highlight, though, if we can go back to that to the research homepage. Thank you, Jason. So you're going to be getting a daily email, folks. That'll be what we call our daily digest, which will give or send through to you all the latest updates with star stocks. You can see the full list of star stocks here. That's what Jason's clicked on just there, where you can see our star growth stocks, and you can see the amount we have in our borderlines and star income. So you can easily go through and scroll through them all one by one if you like. If we go down the page, though, you'll see we also disclose a range of information to our members too. We have a weekly video that we provide our members talking about the stock market and stocks we like. You can read Tim's monthly message. His August one will be due very shortly, so you can also read our thoughts on where the market sits at the moment. And the Stock Room, which is a webinar where myself and our head of research, Ken Trin, get together. As being part of the share market game, you're more than welcome to attend these sessions. It's where basically Ken and I will talk to what's occurring in the market at the moment, and we answer our member questions. So no matter what stock they're interested in or the like, they can obviously just ask us questions as well. And it's all part of what we provide our members, because the share market is a bit of a scary beast if you're left to do it on your own. And, that's why people, almost 5,000 people actually trust Stock Doctor to assist them to invest in the share market successfully, real money down. And obviously it's been a great privilege to serve them. And we look forward to also helping you on your education journey as well. If we can quickly go back to the presentation, Jason. And then we'll answer some questions. I think we've got a few questions there in the audience at the moment.
Oh, did it again.
Yeah.
Sorry,
No, that's all right. No worries. All good.
The amount of webinars that we've run
that's
together.
Right. It's all okay. So we've explained that. So just briefly before we go into questions, I just want to highlight this for those of you that may need to go. We do have a number of other webinars set up as well. So the next one's going to be on the 30th of August at 12:30 again, where we really delve into some more smarter strategies with regards to using Stock Doctor to help you manage stocks. And then beyond that, we'll have a reporting season update, and then we'll have the 6 secrets of successful share market investing. So obviously you can tell there's a bit of a series. If you like, folks, you can join me on Twitter as well if you have a Twitter account. My handle is Elio_D'Amato. That's without the apostrophe. So Elio_DAMATO. So you can obviously ask questions and be interactive in regards to, I often give updates on star stocks on Twitter to encourage people to go back into Stock Doctor and have a look at our thoughts in there. So let's go into the questions there. We'll start with you, Joel, in regards to you're asking how many people are actually in the webinar. We've got close to 200 people that are actually in attendance. So that's of the 6,000. So obviously not all of them, but definitely a good audience. Peter has asked Jason, as a first-time investor, how would a successful investor go about evaluating all the many different stock options out in the share market? The sheer amount of work is daunting / terrifying. Peter, you are an enlightened person. The fact that you have gone with a question like that tells me that you're smarter than the average bear, because it is absolutely a terrifying thing, investing your real money in the share market. And who on earth wants to research 2,000 stocks? I mean, I've got better things to do with my time. Well, actually, no, I don't. I actually really enjoy it. But most normal people actually have far better things to do with their time than that. So that's where a service like ours can help. That's why Stock Doctor is going to help you through the game, because what it does is it confines your universe. I mean, you saw the portfolio constructor. You know, there's 2,000 stocks on the exchange. There's 500 in the All Ordinaries, our index. There's 60 star stocks. Yet that's still so many to research. But tools like the constructor, like the optimizer, can keep you very much focused on the 10 or 15 or even 20 that align with your investment objective and the level of risk you're wanting to take on. So other than that, Peter, you're right. It is a tough gig to do on your own. But if you've got trusted partners with you that can help keep you focused, and your strategy is so important here, because it's not only what you should be looking at, but what you should be ignoring as well. You can't invest in everything. So having a strategy will help you have a rule book that'll keep you focused on the right types of businesses.
Yeah, well done, Elio, and good luck with the game too, Peter. Simon asked, do you have a trigger to sell a stock? Yeah, there's numerous triggers there, Simon. Those stocks that we like, so those Star Growth and those Borderline Growth, if we want you to sell a stock there, it will be an email that says Star Stock Out. Which would be yourself. You in the share market game might not want to wait, and there mightn't even be. There will be over the next month or so, because we, based on our approach, every one of these stocks needs to report. Then we do our analysis on it. Some will miss the mark, and we'll kick them to the curb. So you will get those emails. The other way is, like I mentioned through that alert, there's a couple of ways. Technically, you can look at a chart. Which is share price movement. So when you start to see a stock that's rallied up very nicely, so a chart that goes from sort of bottom left to top right corner is where we all like to see them go. And when that turns and starts to pull down, you might have an alert technically around that to get you out.
I mean, remembering again, it is a short-term game, Simon, and so, sometimes there is a little bit of luck in picking that. But if the share price, falls 10 or 15%, then in such a short time frame you might just need to cut and then consider another investment. Don't just cut and sit in cash, because it's probably going to cost you in the game. So you need to be proactive with your money. But over the long run, getting out of 10% will slam you in terms of transaction costs and capital gains. It's just not going to be a real option in real life, but for the game it might very well work.
Yeah, with the game you could go into the alerts where I just sort of led to under the tools tab, set up an alert around price. So you might have something called a trailing stop loss. So I've just set up BHP as the code. So if we look at the highest high of BHP from today, for instance, wherever we are, let's call it today. And if it falls by, I don't know, you might want to be very ruthless around here and set something like 5%. You could set yourself a little alert, something along those lines, process this intraday and email me. And then all of a sudden you carry on through your day, set that alert. And if BHP falls off its high from today, by 5%, you'll be alerted to that. So you can trigger those and set those up around your own risk objective. We would certainly not advocate on a star stock having a tight stop loss as such, so close there, but that might be your trigger. You could look simply at something like this, where we've gone back to those watch lists. We actually put in your ASX share market game, if you just select that game, most of the first column headings are about price change. So you could have a price change alert, and just when if that something there has fallen by 15% or whatever it might be. If you look at the day or the week or whatever, that might be a trigger for you. So there's a number of different ways. That's just the way that you set up and what sort of strategy you want to adopt within the game.
Yeah, exactly.
So we're just very wary of time. There are a bunch more questions there, so apologies we wouldn't get to them today. But just to flick back to the presentation, I'll give you some details on where you can contact us in the office. Again, that's the quick link in. Those, I believe, are going to pop up within your trial process within the page. Good. You can register for those webinars as they appear from one of the banners within the Stock Doctor platform. So if you need any assistance on this, or you just want to understand methodologies a little more, you can contact us on 1300 676 333. We're based in Melbourne, or send an email through to inquiries@lincolnindicators.com.au. So, Elio D'Amato, I know you've got some TV appearances to make now, so we really appreciate in having you here with us today, sharing your knowledge with thousands of investors like you have previously and will continue to do. So, Elio, thank you for your time.
No, thank you, Jason, and congratulations once again, everyone. I sincerely hope it was a valuable investment of your time, and I look forward to the next in our series where we go into a little bit more depth around strategy, Jason.
Yeah, thank you, everyone, for attending, and we'll see you in the next session.